Hello, everyone. Welcome to our Keys to Success for Workers' Comp webinar. My name is Vinay Agostini, and I am CEO of CID Insurance Programs. I want to introduce Lexi Johnson, who's our Work Comp New Business Underwriter. Say hi, Lexi.
Hi, everyone.
And Darby Fisher, who's our Work Comp Renewal Underwriter.
Hi there.
And then last but not least is Jacob Cole, our marketing coordinator. He makes everything hum behind the scenes. Say hi, Jacob.
Hello, everyone.
Okay, so let's get started. Let's talk about logistics. Most of you are used to the routine. In webinars, you're going to be muted, but and definitely able to hear but not speak. So please, your voice is important to us. Post your questions in the chat room at any time throughout the webinar, and we will stop and answer those questions. A short survey. We've got a little bit of feedback coming over. A short survey will pop up at the end, and again, we really want your feedback, any ideas about new webinars or things that we could do better to improve what we're already doing. So without further ado, let's talk about objectives and then get this started. So work comp is a different beast than P&C, your property and casualty. So you really need to know the right information to gather from your insureds. And then the girls are going to be going over today and how to best present your new business proposal. So Lexi's going to spend some time on that. And then definitely from the renewal process, there's so many things that go on, from endorsements, cancellations, and then the renewal process itself. Darby's going to spend some time helping you become more of an expert navigating workers' comp. And then what are the most common mistakes that brokers make with workers' comp? So I think Darby's going to spend a little bit of time on that as well. So without further ado, I'm going to pass this on to Lexi to get started.
Thank you, Anne. So good morning, everyone. Thank you for joining. I'm going to start with our new business underwriting tools. And just to jump right into it, firstly, the class of business and description of business operations is so important. Oftentimes, I receive an accord application with the description of operations blank. So I don't have a firm understanding of what the employees are doing and if they're classified correctly. So you definitely want to start things off with your insured, who you're quoting the business with, by asking many questions. Know what their exposure is. What are their business operations? What type of employees do they have? What are their day-to-day duties that they're performing? These are just some questions that you can ask so that you and also I can make sure that they are properly classified and that they're not being overcharged for payroll that could be put in a different classification. A great tool to ask your insured up front is if they have a website. From an underwriting perspective, when you send me a risk, I'm going to search them on Google, I'm going to review their website, and that's actually exactly what carriers are doing as well. They're looking them up on Yelp, Google, they're searching their address. For example, a restaurant, they're looking up their operating hours, are they open past midnight, etc. And just the other day, I actually received a submission where they were classified under sales, but after searching their website, I discovered that they're actually delivering products, they're going on-site to companies, fixing their machinery. So obviously, I realize there's definitely more classifications that need to be added in payroll. So a website is something to ask for, and if you have any questions on classifications, you can always reach out to me. A really good source also for trying to classify an employee is the rating bureau. You can search Work Comp Rating Bureau, and you can actually search their duties and see what class description fits them best, and that is constantly updated, so I'm always on that. We do welcome new ventures. Actually, I write a lot of new ventures, and a lot of carriers are comfortable with writing them nowadays. Of course, there are some guidelines that carriers have when it comes to the type of business. So for example, a contractor or maybe trucking, they might require 3 years of coverage. But again, that depends on the carrier. Some carriers do accept new ventures as well. So when it comes to a lapse of coverage, some of our carriers do accept lapse in coverage. We try to stay within 30 days, but I have been able to quote a lapse up to 2-3 months. So when it comes to binding coverage, of course, the carrier requires that no known loss letter at the time of bind, and then they also want to know, why did it lapse? Did an accountant drop the ball, and that accountant is no longer with the company? We just have to present a story in detail to the carrier. And then I get the question a lot of times, do you accept midterm moves? My first question always back is, why? Why are they trying to move midterm? Is it strictly premium driven? Do they not like the carrier? And what is the reason? And then I always try to make sure that the insured knows what will happen when they move their policy midterm. I think a lot of times the insured's unaware of what actually happens. So one example is if an account chooses to move midterm, they're going to receive a short rate penalty cancellation fee from their incumbent carrier who they're requesting to cancel with. And that fee is actually a percentage based on the amount of days that they had coverage, and it's based on their premium. So to give you a really quick example, if they have had active coverage for 160 days and their premium is around $7,000, they're looking at about a $2,900 short rate penalty fee if they choose to move midterm. So you kind of have to ask yourself, is it worth it? Not only that, but a lot of carriers, they don't like midterm moves, especially when they're experience rated, because their anniversary date is changing. So that's unfavorable to many carriers. And then the modification factors. So when you're working on an account, you need to ask if they're experience rated. Normally, you'll see experience mods on larger premiums, and basically what that is the insured's getting rewarded if they have no losses or very low losses in their class of business. And a discount is actually applied to their policy. But in the reverse, if they have a lot of claims, a severity issue, maybe a huge claim, then the experience mod is going to cause the insured to pay more. So the experience mod always starts at 100%. Anything below or above 100% will result in a credit or a debit on the policy. So if you discover their X mod is 150%, then there's some claims activity. In order for me to submit to carriers, I'll need loss history. So we require 3 years of current valued loss history. So I'll need that along with the submission. And then just to answer a question that came in, can you cover a company that works at all states? It kind of depends what they're doing. For example, if it's a staffing company, I've had a lot of difficulty in the past writing a staffing company that is in multiple states. If they're trucking, like long haul trucking, we do have one carrier that will consider it. So it kind of depends on what they're doing. I've only gotten a couple submissions that are in all states, so you can definitely give me a call and we can go over it. And then moving on to the next slide. So this is what I need to quote a risk with our carriers. Obviously, it's a work comp Accord 130 application. I know this picture is a little bit small, but everything highlighted. So that's the FEIN number, the mailing physical address, the years in business, of course, the effective date, the insured contact information, and then also officer and owner exclusions. This is just the first page, but of course I would need the rest of the application as well. So everything I mentioned is required, but especially the FEIN. That is used by carriers to track their submissions, so I cannot submit an account without that. And then also a question I received a couple times when it comes to a business location. In today's world, most employees are working from home. So brokers have asked, do they need to put the home address of the employee But the answer is no. They have to put the business location on the application, not their actual individual homes. It's also really helpful for me when you provide the current premium or a target premium. Therefore, I'm able to kind of start at a starting point of what premium we need to get under to be competitive in buying coverage. And then lastly, providing the payroll by class code and also by location. Sometimes I see payroll all lumped into one location when they're reporting 3 different locations. So it needs to be separated by location. If you can just provide as much information on the court application, that'll help me underwrite the risk and then release terms to you very quickly. So in the next slide, when it comes to the new business presentation tools. So most brokers want to use our proposal when presenting it to the insured. Instead, we actually recommend each agent should have their own quote template. Don't rely on ours because the information disclosed is for you. Each agent should actually customize how you want to present the quote and what information you want to put on it to the customer. There are important pieces I recommend including on your template, especially when it comes to, the percentage of debits, credits. It's important to present net rates also, which takes into account discounts that are being applied. And Jacob actually attached in the chat an example of a work comp proposal that you can use in your office. So lastly, the payment instructions. So with work comp, the premium is due, with work comp policies are not able to be financed. So I get this question often, can we finance a work comp policy? The answer is no. With work comp policies, everything is direct bill, not agency bill. So the insured is set up on a down payment with an installment plan, and it depends, of course, on the premium. So they might be set up on a 10% down, 9 installment plan, or 25% down, 4 installment plan. But of course, they can pay the premium off in one payment. So that's also an option. But just know all payments, they have to be paid directly to the carrier. And then this is the sample work comp insurance proposal. So I was just going to go over this briefly. As I mentioned, Jacob, he attached a fillable copy of this to you so that you can use it. And also on our website, it's there at cidinsurance.com. You can customize it. So here you can see the limits, you can see the classification, the description, their payroll amount, and then underneath their payroll amount and their rate and premium, you can see, this is like their state assessments, their credits, their debits that you would put in, and then the estimated annual premium. Off to the left, that's normally where I put the net rate. So that takes into account their rate with discounts and debits. And then under billing terms, that's going to be, what they're set up on. If they're a 9 installment plan, 4 installment plan, so you can put that information in there. And then lastly, our targeted classifications. So if we move on to the next slide. Okay, so here's a list of our target work comp classes. And you can see there's a wide variety. We work with over 5 work comp carriers where we hold great relationships with our underwriters. So with that, we're able to negotiate pricing, get the most competitive premium for you, for your client. And we do write risks that fall outside this list, but this is just, our basic list that we provide. So when in doubt, you can always call me. I can let you know over the phone if we have a market for them, or if you want to just send me a quick email. I'm very fast at responding, so I can let you know as well. So that is everything with new business, and now Darby will cover renewals with you.
So our office utilizes the 60-30-10 renewal process. So about 60 days out from the renewal date, we're going to be gathering updated information such as payroll, officer exclusions, location changes, and remarketing the account to outside carriers. 30 days, we'll send the renewal proposal to our broker. And then at 10 days, we're going to send a reminder. So when you're working your renewals, you should be considering all changes in exposures. It's important to touch base with your insured to gather any exposure changes prior to the renewal. So the best way to do this is having the insured update or complete a new ACORD application prior to the renewal so we have the most accurate information. As mentioned prior, 60 days out, we're going to request an updated ACORD application. That way, any changes that need to be made are done prior to the carrier releasing the quote. In the case we don't receive updated information, the carrier is going to issue the renewal quote based on the payroll from the previous term. So if that payroll doesn't match their current exposure, we'll need to get it updated. Insureds are often unaware that a payroll change can take up to 3 to 5 days, so it's best to get it done before the quote is released. Having updated information eases the process for the broker and gets the quote quicker to the insured. It's also important to inform your insured you are remarketing their account at renewal to find the most competitive quote for them, and we'll be presenting the most competitive quote to you. So each carrier has their own specific appetite per product. So when you're remarketing an insured's policy, make sure you provide us with updated loss runs, payroll, or any address changes. Excuse me. So the best practices for presenting a renewal is starting the process early. Put a system in place that works best for you. On our website under templates, we have a renewal expiration report that you can download and use to organize and manage your renewals. Gather updated information about the risk. Best way to do that is using an ACORD application, and communicate well with your insured. So on the next slide, we'll be going over just a few endorsement requests. First is waiver of subrogation. As far as that goes, it's in a contractual agreement that an insured may have with another party in which it is agreed to waive the rights against another in the event of a loss. This ensures the carrier won't go back to the party even if they are partially at fault for an injury. There's 2 types of waivers, blanket and specific. Blanket waiver is prearranged wording that covers any person or organization. And then specific wording is obviously you provide that to us to endorse into the policy. These should be added at policy inception. In the past, we've had requests to add specific and blanket waivers according to contracts the insured has. However, per carrier guidelines, this can't be done. You either need a blanket or specific, so you want to make sure to clarify with your insured which one prior to binding coverage. And we often get asked about the price. It does depend on the premium, but most of the time a specific waiver is going to be around $250 and a blanket is the percentage of the premium. So depending on the carrier, sometimes when a policy is renewed, the waiver will carry over to the renewal. So make sure you note if the insured wants it removed, it needs to be done prior to the renewal date and our office needs to be notified. For midterm payroll and location changes, anything that happens midterm, they should endorse it onto the policy. Otherwise, the insured could be affected at audit, or if a claim occurs and the location is not included, it's going to be an issue. Make sure to provide the effective date as it's something the carrier requires as well. If your insured hires a new employee that is performing duties outside of how they are written, make sure to communicate with that with us beforehand so we can get the proper classification and payroll added. We recently had a situation where an insured hired an employee that was performing duties outside of their classification, and this was an operation the carrier didn't recover. So because they had a material change, they received a non-renewal notice. So let us know prior to hiring, to the insured hiring employees, so we can try to place it with a different carrier or figure out a solution for them. The next is 601 form ownership changes. I've actually had a lot of these recently. This is something you may run into or may not know the steps in order to complete it. So when an ownership change occurs, either partial or majority, it's extremely important for that information to be communicated to the carrier and the rating bureau. Ownership changes aren't a simple process, so we have to submit the change to multiple parties. So it's super helpful to tell us prior to the ownership change happening. Sometimes we aren't notified until 7 or 8 months later, which poses a huge problem when it comes to audits. When an ownership change happens, we'll need a updated ACORD application, 601 form, and depending on the entity, updated exclusion forms. So you'll need to submit all that information to us so we can take it to the carrier and rating bureau. So on the next slide, you'll see what the 601 form looks like so you can become a little familiar. The first photo of Part A, Section 1, that'll actually be completed by us. The insured will need to complete Part A, Section 2. And then I'll just go over it briefly. The middle image, providing a brief narrative. So an example of this would be effective July 8th, 2021, real estate premier changed from a corporation to an LLC, and here's the new ownership. We just need a brief summary of what exactly is happening. And then the third page is actually the most important, which is the before and after page. On the first column, you're going to put everything the insured is currently operating under, and the second column will be everything after the entity or ownership change is completed. So we'll go on to the next slide, which is executive officers and owners. Yes, owners can be excluded from the policy depending on the state. So corporations, LPs, or LLCs, they have the option to be excluded, and forms are required. So if they're an association, a nonprofit, and individual, these entities, they actually don't need exclusion forms as they're automatically excluded. Entities that are eligible for exclusion must complete the exclusion forms. It's super important that these are sent to the carrier on the inception date of the policy, because carriers will not backdate exclusion forms, and they take effect when they are received. So each carrier has their own personal exclusion form, so keep in mind if a policy is remarketed to a new carrier and the insured wants to bind, a new waiver form is going to be required to be completed. And making a mistake on exclusion forms or not filing any, it will cost the insured's premium. They're going to be included at the time of the audit at officer minimum and maximum payroll. So the California minimum is $54,600, and the California maximum is $139,100. So depending on the class code of the operations, or it's going to determine whether the officer is going to be included at that minimum or maximum. So it's really important that those exclusion forms are on file. That way this can be prevented. So we'll go to the next slide, which is going to be cancellations. I'll briefly be covering what we never want to happen, which is cancellations. The carrier will send out cancellations for the following reasons, which is going to be non-payment or non-reporting. So as Lexi mentioned, work comp policies are set up on direct bill. So if payment is not received, carriers will send out a notice of cancellation, and it's going to give the insured a certain amount of time to make that payment. Our office receives the notice, and we're going to send it to you so you can communicate with the insured and ensure they are sending in payment prior to the cancellation date. Another type of cancellation is non-reporting. Audits are required to be completed by the insured at every policy term. And if an insured does not comply with those requirements, they're going to receive a large non-compliance fee, and their current policy will go into pending cancellation. Carriers are extremely strict on due dates for audits. So if an insured does not send in the required documents before the pending cancellation date, the insured's policy will be canceled with no chance of reinstatement. And then an insured's request to cancel policy is short rate penalty. So if they choose to do this, the carrier requires a completed and signed LPR form, which is the cancellation request policy release form, and that needs to be submitted the day they are canceling. Another issue I see often is an insured not completing an LPR when moving to another carrier at their renewal. So that means the insured is then double covered until an LPR is submitted to their incumbent carrier. Obviously, this is going to cause a lot of problems because their incumbent policy will probably go into cancellation and then be audited. So the best practice for avoiding policy cancellations is you got to make sure you're communicating well with the insured, following up on their account so it stays active. That way you don't run into any cancellation issues. And then we'll go to the next slide. I think that's for Renee.
Thank you, Darby.
Yeah.
Lexi and Darby, you guys did an absolutely great job and provided a lot of good information. I want to thank you all for joining us because that concludes our webinar today. I'm going to give one last chance for someone to throw any questions that they may have for Darby or Lexi out. Otherwise, you can email them because Jacob's going to be sending out information to you so that you'll have their contact information. And then please make sure you visit our website as well, cidinsurance.com, because that's where we've got all of our proposal templates, and we have marketing tools for you to use for new business and renewals. And then Lexi is ready to start receiving your submissions for new business on work comp. So let us know how we can help you, and we look forward to doing business with you. Thanks so much. Have a great day.